Today on the Roxom Report, Bitcoin briefly climbed above $119,000 as the US government shuts down, sending markets into a liquidity surge that historically boosts crypto. The Bank of England signaled a shift toward digital money. Governor Andrew Bailey says stablecoins could reduce reliance on banks. And Chainlink has integrated with SWIFT, letting banks execute on-chain transactions through existing payment infrastructure. That's all coming up right now on the Roxom Report. Welcome to today's episode of the Roxom Report. Today is Thursday, the 2nd of October, 2025. I'm your host, Ione Butler. And we're going to start off today with a look at the markets. This is the Market Watch. Bitcoin is surging as the US government officially shuts down. The leading cryptocurrency climbed nearly 4% in the past 24 hours, breaking above $119,000 for the first time since mid-August. Other major tokens also rallied, with Ethereum, XRP, Solana, and Dogecoin posting gains of 4 to 7%. The shutdown in Washington comes after Congress failed to reach a funding deal, leaving key economic reports in doubt. Analysts say the delay could create a so-called liquidity impulse. In simple terms, that means more money flowing into the system, lower borrowing costs, and greater risk-taking in markets. Historically, that has supported Bitcoin. Crypto strategist Matt Mina says this moment could set the stage for Bitcoin's next explosive rally. At the same time, derivatives experts note that Bitcoin options look unusually cheap, suggesting traders expect big moves ahead as uncertainty drives volatility. Okay. Anton, our producer above, do you have any thoughts on this story here? Did you expect to see a spike with the government shutdown?
I guess there were some signs. Gold rose to an all-time high over the last couple of days. Government shutdown is just more instability for the U.S. economy and U.S. dollar, so it does kind of track. I guess I would have thought that the stock market would have dipped and Bitcoin along with it, followed by a rise in Bitcoin, but none of that happened. The stock market rose as the government shut down, which seemed unusual.
Yeah, strange moves, but
yeah.
I think the Bitcoin price move makes sense. You know, uncertainty, instability, move to Bitcoin. The stock market is it doesn't seem to add up as much, but it does. It makes weird moves these days. So
yeah,
who knows what's really going on?
You can't track it.
Yeah, exactly. Any other thoughts on this one?
I don't. You want to head to the global gist?
I would love to. Now let's dive into the global gist.
Okay, we're coming back to Central Cam, and your mic might need adjustment, but you're on. We can do that after.
Welcome back. Blockchain technology is making its way into traditional banking as Chainlink announces a major integration with SWIFT, the global financial messaging network. The move allows banks to trigger on-chain transactions using the infrastructure they already rely on for international payments. Chainlink's execution layer, called the Chainlink Runtime Environment, has been connected to SWIFT messaging, enabling banks worldwide to link directly to blockchains. This development builds on a 2024 pilot called Project Guardian, conducted with UBS Asset Management and the Monetary Authority of Singapore. The project demonstrated how tokenized fund workflows could be integrated with existing fiat payment systems. Through SWIFT's ISO 222 messaging standard, banks were able to carry out fund subscriptions and redemptions on-chain. Traditionally, these processes rely on multiple intermediaries, including custodians, transfer agents, and fund administrators, which adds time and complexity to transactions. Chainlink says this integration provides last-mile connectivity for financial institutions, giving them a familiar and secure bridge between traditional finance and blockchain networks. Swift, a Belgium-based cooperative founded in 1970 or the 1970s, operates the messaging backbone for cross-border payments, handling trillions in transactions each year. The organization has been exploring blockchain since 2023, partnering with consignors and over 30 institutions, consensus, my apologies, to create a real-time 24/7 settlement system for tokenized assets and central bank digital currencies. With assets under management exceeding $147 trillion globally, this integration represents a significant step towards faster, more transparent financial transactions, bridging the gap between legacy systems and the blockchain era. Okay, some big moves there. Bringing together TradFi and blockchain technology. What do you make of this, Anton?
It's a cool development. Sending transactions across borders has always been a pain until TransferWise came about and sort of made it cheap. Yeah, if you're not going to use them, and they are sometimes a little tricky to work with, you don't really have another good option. So I think this is a nice development.
Yeah. I always am curious. It seems like these types of moves from these institutions are needing to kind of evolve, or they'll be taken over. Yeah, I guess it's kind of been a sweet ride for, I don't know how many years that would be, almost 50 years, 55 years. They've been kind of been doing it their way, and now they're kind of forced to update. I think this whole time it could have been definitely faster and easier and cheaper, but it's always been in their interest to keep it slow and expensive.
That's true.
But yeah, this is inevitable. I think having a bit more competition and options will definitely help. It'll be interesting to see with all of these advancements and all the different companies, because there's tons of them. Visa and MasterCard and stablecoin, if there's any that are going to kind of rise above and maintain, sort of be on top, or if it's just going to be, I guess we'll see over the next few years how that all plays out. Yeah,
true. So, I mean, right now, if you're not using Wise, what do you use to transfer money across borders?
There's PayPal. There's PayPal. There's Western Union. Right?
Western Union, and MoneyGram, right?
Yeah, which is quite expensive, apparently.
And I think we tackled a story, it was either Western Union or MoneyGram, I can't remember. I think it was MoneyGram, that they're getting into the stable coins now.
Yeah, definitely. I feel like there are, there's the options, I don't know. There's a few, surely.
Yeah, I guess I'm thinking low fees, and there's really not a lot of options there.
Yeah, true. I wonder what the fees with these types of payments will be, what the transfer rates would be if they're international. I think a lot of money is lost in the conversion rate too. They give themselves a more favorable conversion rate. So there's no fees or low fees, but you're being done on the conversion. Okay, should we move on to our next story?
Yes.
This is another blockchain story. The US Securities and Exchange Commission is reportedly exploring a plan to allow blockchain-based versions of stocks to trade on crypto exchanges. Under the proposal, still in its early stages, investors could buy and sell stock tokens, digital representations of shares in publicly traded companies, on approved cryptocurrency platforms. The move reflects a growing regulatory openness to tokenization, the process of creating blockchain-based tokens that mirror ownership of traditional assets. SEC Chair Paul Atkins has described tokenization as an innovation regulators should encourage, noting it could improve access to financial markets and reduce costs. Interest in stock tokenization has surged in recent months. Platforms including Robinhood and Kraken already offer tokenized stock products. Meanwhile, Nasdaq has requested SEC approval to list tokenized securities on its exchange, and Coinbase is seeking permission to offer tokenized equities to its customers. Despite growing enthusiasm, the plan has drawn caution from traditional finance firms. In July, Citadel Securities warned the SEC to ensure tokenization delivers genuine market benefits rather than exploiting gaps in regulation. Tokenized stocks are emerging as one of the fastest growing areas within digital asset markets, while most tokenized assets have focused on private credit and US Treasury bonds. Equities are now catching up. Industry data shows tokenized stocks currently represent just 2% of all tokenized assets, though their value has nearly doubled in the past 100 days. A recent Binance research report compared the rise of tokenized equities to the early days of decentralized finance, suggesting the market could exceed $1.3 trillion if just 1% of global stocks move onto the blockchain. This development signals a potential turning point as traditional finance and crypto increasingly intersect. Okay, I guess, Anton, please let me know if you can get your head around this. What the benefit of buying a tokenized stock rather than just buying the stock, the actual stock?
Here's my hot take.
Okay, yeah.
I don't get it. I don't know why you would need to do that. It just means putting a stock on the blockchain, right?
Yes. Yeah.
Yeah, I don't know why that's important. I think it's a cool move forward into integrating blockchain technology. I just don't see I don't know the benefits of that.
Yeah, so basically it's a digital representation of a traditional stock that sits on the blockchain, like owning shares of Apple or Tesla, but tokens live on a digital ledger. Mm-hmm. They're typically backed one to one by the real stock held in a reserve by a custodian or broker. So tokenized stocks you can trade 24/7. Traditional markets are only open during business hours. Tokenized stocks can be traded 24/7. I'm curious if that is the case. Tokenized stocks can be traded 24/7. If the markets are closed, are there any price fluctuations during this period of time where you're buying and selling tokenized stocks but the market's closed?
Right. I doubt it because it would still be tokenized but still listed on the New York Stock Exchange.
And it's supposed to be backed to the actual
thing.
Fractional ownership, you can buy very small fractions of a stock, making high value stocks like Amazon more accessible. But you can do that already with a lot of exchanges.
Yep.
Global accessibility is broader. People in countries without access to US stock markets can invest using stablecoins or crypto. Okay, that makes sense.
That's a big thing, and that's very relevant to Roxom.
Yeah, indeed. Faster settlement, instant or near instant. For tokenized, blockchain transactions can settle in minutes compared to T plus 2 days for regular stocks. Okay, for some people that is, it is confusing when you're buying stocks. I'm like, at what point am I buying? Mm-hmm. When is this settling? The settling is not so much the case. There's some you're not actually sure of the moment that it's sort of buying, not for individual stocks necessarily, but there's been with some platforms where I'm like, at what point am I actually buying in here? So I can see why you would want to have a little bit more certainty of buying and settling at a fixed price, knowing that that's happened. Lower fees. Fair enough. Programmability. It says tokenization, one of the benefits is smart contracts. For traditional stocks, ownership, dividends, and governance can be automated using code. Auto dividend payouts. All right, so I guess that's probably like a even. The downsides or limitations. Regulatory uncertainty. With tokenized stocks, higher risk. Liquidity is lower with tokenized stocks. Traditional markets have deep liquidity. Tokenized markets may have fewer buyers and sellers. Backing and trust. For tokenized stocks, it really depends on the issuer. For traditional, you must rely on the issuer actually holding the real stocks they claim to tokenize. So that is a big thing. I would want to know that I have the stocks rather than tokenized representation of the stocks.
Yeah.
Limited corporate rights varies with tokenized stocks. You may not get full voting rights or other shareholder benefits unless explicitly offered. Okay.
You used to get a really nice actual certificate when you bought stocks.
Oh yeah, when was this?
Oh, I don't know, probably our grandparents' generation, maybe before that.
Yeah.
But yeah, something real. But I agree with you. It's like putting an intermediary between yourself and the stock that you're supposed to own. I suppose that's always the case if you're buying through any sort of exchange, which you always are. But But yeah, it just feels like this is where it's all going, and they're just preparing for it. The blockchain seems like a more secure system than whatever complex system they have right now.
Yeah. Yeah. So just to summarize why you would choose tokenized stocks if you're outside of the US and want access to US equities without a broker. You want to trade any time of day, especially in crypto style portfolios. You want to invest small amounts, even pennies, in expensive stocks. You prefer blockchain based assets and already use crypto wallets. You want to stick with regular stocks if you want full legal protections and regulatory clarity. You want access to deep liquidity and institutional grade trading. You're holding long term and don't need 24/7 trading or blockchain features. That seems fair.
Yeah. Very well balanced.
Yeah.
Thank you, ChatGPT.
Yeah. Indeed. Okay. Should we take a quick break?
I think let's just roll into the next story, and then we got a little pre-tape to roll.
Okay, sounds good. Visa is testing stablecoins as a tool for faster cross-border payments. The payments giant has launched a pilot program using USDC and EURC, two widely used stablecoins, to enable near-instant international payouts. The announcement came at Sibos, I want to call it, SIBOS, but I think Sibos sounds good. Sibos 2025, one of the financial industry's major conferences. Under the pilot, select banks and financial institutions can pre-fund Visa direct transactions with these digital assets. Visa treats the stablecoins as cash equivalents, allowing participants to initiate payments without the delays typical of traditional banking systems. Chris Newkirk, Visa's president of Commercial and Money Movement Solutions, said the move is designed to modernize treasury operations. It reduces the need for capital to be parked in advance and gives businesses more flexibility in how they move money across borders. The pilot is aimed at banks, remittance services, and other financial players looking to optimize liquidity. By using stablecoins, participants can reduce exposure to currency volatility and improve predictability in cash flows. The system works 24/7, even on weekends and outside traditional banking hours. So far, Visa reports it has processed more than $225 million in stablecoin volume through the pilot. While still a small fraction of its $16 trillion in annual payments, the company sees the trial as a first step toward broader adoption. Visa plans to expand the program to more partners in 2026, signaling a major push to integrate digital assets into the mainstream financial system. Okay. There we go. We were talking about how these mainstream players are all jumping on this bandwagon.
Yeah, absolutely. It feels similar. This is to the tokenized stocks. It feels like stablecoins is the way to go. It's probably going to be cheaper and faster for these companies, and they better get on board before it passes them by.
Indeed, indeed. We have, are you happy to kind of move on to the next thing? Do you have any more thoughts on this?
I do not. Go for it.
In relation to this, we're going to have a look at one of our interviews with David Parkinson and Adrian Cannon, who are the CEO and chairman of Musket. We talked with them about payment processing and how the UK has historically led the way in that field. And also the Musket payment processing system their company is developing. So this will help give you a little bit more context about how traditional payments have been processed over the years and how this new technology is going to revolutionize that. So enjoy. Thing that stood out to me is there have been a couple of times where the UK has been at the forefront of these sort of payment processing, which was kind of nice to hear because I feel like in this Bitcoin space, the UK is a little bit behind. Is that, yeah?
Yeah, I think there have been many times. I mean, in my career, I can think of many, many occasions where we've led the world. I mean, EMV is the most obvious example, but there are more esoteric things like continuous link settlement, where we protect banks moving money between each other so that there's never a situation where one of them goes bust because they've sent more money than they're going to receive. We innovated in terms of bank clearing systems all through the 60s, all the way into the early 2000s. We have consistently, I would say, been in the top 3 of innovators in payment services in the world. And it's one of the reasons why we have such high penetrations of card usage in this country, and not as high as some, but certainly I would say in the G7 the highest, and that's a good thing. We have done many, many important things. The move to contactless outside of America was really pioneered here and driven here. And I ran a program for, I suppose the country is one way of putting it, involving everybody, retailers, banks, transport companies, to help the adoption of contactless card payments, because there are benefits for everybody in terms of the speed and ease and convenience. But there was a lack of etiquette, so that it was being done in different ways in different places, and that was confusing people. And we did see during the Olympics, so this is 2012, we saw a big uptick in contactless usage, partly because of the sponsorship by Visa. The irony of that was the biggest uptick was COVID, when everyone started panicking about touching cards and so on. And the banks raised the limit to £100 and contactless usage went through the roof.
What was it before?
£30, so it was very low.
And they're discussing having it be unlimited now, right?
Well, they are. It's a matter of consultation at the moment. I think unlimited is unlikely because of the fraud risk.
Yeah.
My bet is on £250.
I'm confused because I have been making contactless payments with a credit card for like £350 recently.
Using your phone?
Yes.
Yes.
Yes. Okay.
So Apple and Google Pay basically take the risk above the contactless limit.
Interesting. Okay, I wondered how that had happened.
So you have a hardware intermediary when you have your phone with you that has biometrically said you are who you are.
Right, right.
And therefore they can risk a higher value transaction on contactless.
Got it, that makes sense.
But unfortunately, if it's just your bank card,
yeah,
there is no
guarantee.
No guarantee at all.
Me.
So they cap it at the moment to limit the fraud.
Got it.
So yes, this country's been enormously innovative. We had a period of some, I think, 30 years that really came to an end about 10 years ago, where the banks worked together collaboratively but in competition, and there was a real sense in which we were able to build the infrastructure this country needed.
What do you think changed?
Partly an awful lot of political intervention. So the Cruikshank report rightly identified some failings, and normally what would happen is the industry would have been asked to correct those failings, but actually the Labour government at the time went further and dictated how that would be done.
The Labour government? It was 10 years ago?
Yeah, we're going back a long way.
I see.
And then unfortunately in doing that, I think they took the initiative away from the banks, and the banks rather ever since have said, okay, well, you tell us what we should be doing and we'll do it. And unfortunately, government direction, certainly in the last 8 years, has been inconsistent and unclear, and the deliverables from the new payment architecture program have not been effective in my view. Much more work needs to be done. In the last year and a half, there's been some new energy and drive put into it. The Ghana report helped in that regard. It clarified the problems, and it demanded that we set a better vision for payments, and the government, especially government departments like Treasury, have acted to try and bring some vigour into the process. My concern is that we are carefully recreating a new version of the old payment services, and they are dated in their thinking. And certainly when you look at the potential of Bitcoin as a digital currency that could flow through every pipe in every organisation easily, what is being built within the UK payments infrastructure today, or what is likely to be built, I may be pleasantly surprised, is a better version of the old mousetrap, as opposed to something that would carry the country forward for potentially 1,000 years or more. So that is not an uncommon thing, though. Infrastructure doesn't often change radically. It changes by increment, and it constrains change. You know, we live with railways that aren't that economically efficient because we have the width of the rails set by random chance in a colliery in the northeast, and that was just how far apart the rails were when one of the first steam engines was built. We abandoned Brunel's opportunity to create a much wider gauge that would have carried heavier traffic more efficiently. Infrastructure creates its own legacy drag, and it's very hard to change it quickly. And that's one of the challenges we face with making Bitcoin an everyday payment method. We've got to fit into what works today.
Having this conversation with you, I can completely understand why Adrian is such a great chairman, advisor, a person to be part of Musket, with this understanding about how everything works and how Bitcoin can be incorporated. How did you? Well, first I was going to ask about your orange pill moment. You seem very good at orange pilling people these days, and then also how you came to connect with Adrian.
Yeah, sure. And, I could listen to Adrian all day. It's
fascinating. It's like really opening my mind up, eyes up to
absolutely,
things.
yes. So, I did mention this previously on the last time I was on, so I won't do the full story, but I was interested in Bitcoin. I think I saw something around 2012, 2013, and it was when the Winklevoss twins actually invested. I think they took their Facebook settlement and then invested in Bitcoin, and that hit BBC and hit the newswires. And I figured there must be something in this. If you're going to put, I think it was around about $60 million at the time, then it's probably worth taking a look at. And then fortuitously, about 9 months later, I was working on a project for PwC, so management consultancy was my background, and I was working for Boris when he was the Mayor of London. And my job at that time was to take cost out of government. It was, here's $1 billion of spend, how do you reduce 100 million and make the government more efficient? A side quest that they sort of asked me was, we think there may also be some supply chain fraud problems and just general efficiency of payments to suppliers, anything north of £5 million or so for building the likes of Crossrail or heavy capital infrastructure projects. Can we look into whether we can use Bitcoin as a payment method? And we can pay our tier one suppliers and contractors in Bitcoin. They can then cascade that across their own supply chain. We can follow those payments. We can see where it's going, in what quantity, and we can validate that they are making the declared level of profit on what is effectively a public infrastructure project that they said that they would during the tender process. And that there's no fraud happening along the line, and the government would then be the final redemption. So they would effectively set up an exchange. Now, this was a very high-level project, something we looked into, spoke to the Chicago Bitcoin Center, the Royal Mint, and a few other entities along the way. Made a presentation, and it was essentially deemed too early. It was just too early at that stage of Bitcoin and in government. There was too much risk, too much political risk, too much career risk, and the volatility was high. We're talking $400 per Bitcoin. During the phase of the work that I was doing, I think it went from 400 to 1,200. That was a difficult message when you're dealing with entities who want stability and transparency. So it ticked a few boxes, but not all of them. And I think what they really wanted was a central bank digital currency, which thank goodness they still don't have. So that was the beginnings, and then was just obsessed. I think the more and more that I looked into it, the more I found it interesting, the more I dug into Bitcoin, the more I understood about the current financial system, and as a result of that, the more that the entire space appealed to me. And it's, as anyone who's involved in Bitcoin can attest to, people refer to it quite often as the rabbit hole, because once you go in and you start to discover how money works, really how money works and how it comes into being, how that then is cascaded across not just government and businesses, but all throughout society, and then what that then the second, third order of magnitude effects of how that impacts decision making, and how those decisions then cascade and have an enormous impact. So going back to the source and doing all of that reading and trying to figure out how we ended up where we are, just gave me this ton of information that I think, if I'm honest, Ione, I just had to get out. I just had to talk to someone about it. So I set up the training course to educate lawyers, VCs, accounting professionals, primarily on how Bitcoin works and fits into society. And that effectively then became the research basis upon which we built the Bitcoin or the Musket proposition. So sort of one thing, reading an article in 2012, 2013 brings me into the studio today.
Fantastic. And how did you connect with Adrian?
There was a strange sort of period of my life where I would go for drinks with men in hotel bars that I met on the internet. That's my summary of the VC and investing market. It was, anyone who's built a business can attest to how difficult it is to secure investment. And, I wasn't starting this venture with, £1 million in my account to then say, okay, here's the funding for engineering. We had to build the proposition, identify what we needed, find the right engineering team, and then go out of our way to then say to the market, this is our vision. This is what we want to see. We want to see Bitcoin succeed as money, and we want to do it in a way, almost in that the sort of sly roundabout way that Hayek talks about. We want to do it so that it's simple, it's easy, and it's frictionless for users. And I needed to find both investors and also various people from the payments industry. And it was through, I think it was an investment forum that I was either talking at or I'd uploaded the pitch deck to, that Adrian reached out and said, look, I think it's interesting what you're doing. I have a background in payments, as we just heard. We might be able to collaborate on this. So, we had a conversation, and I think I hit Adrian with both barrels for about an hour in a bar in London. And I think he sort of walked away. Well, I can't attest to how he felt afterwards, but he sort of said, I think he realised it was serious, and it wasn't just a flash in the pan. Actually, there was a degree of innovation, there was vision, strategy, and execution that was laid out. What we lacked was just some of the key pieces to plug into that. And Adrian and a lot of his network that he's been involved with have been fundamental in helping us on that journey.
Yeah, I can see such great synergy with the partnership. Makes a lot of sense. Any new innovations at the company, or what?
It's so look, that's what we do. We're pushing the boundary as far as we can, but we do have a hurdle rate right now. We have to achieve our objective and our goal. We have to become one of the best payment businesses on the planet. So making sure that all of our existing fiat rails are delivering settlement within 24 hours to customers, accessing a wide range of payment methods with Bitcoin in parallel, and making their lives easy is absolutely key. The big one, I think, on one side of the coin that we've got is we're driving merchant adoption. That's fantastic because we are laying the infrastructure. We're creating those destinations for people to spend their Bitcoin. There are other people working on the actual the rails themselves. We're creating those destination and endpoints. The other side of that coin, though, is people need Bitcoin to spend. So how many people are buying Bitcoin? And in the UK, we have a great advantage, to an extent, a sort of a great advantage, because actually there's the without having to incur capital gains tax, you can spend and replace. So up to a certain degree, you can spend your Bitcoin and then go and buy the same amount back.
What's that number? Do you know?
Off the top of my head, I can't recall.
Is it like
but
quite low, or is it a few thousand?
I would want to defer to an accountant on that that one. But I mean, I think it's within your even if you do incur capital gains, it's your personal allowance. But bed and breakfast, I'm not sure whether there is an upper limit. That's one for the X community to perhaps advise us on in the live stream. But that immediate issue, I mean, ideally we will end up in a world where there is no capital gains tax for using Bitcoin. That's where we want to advocate for and get to. I think I digress. I've lost my train of thought there.
Sorry, that was me. I derailed you a little bit. Kind of the question that we led in with was you're connecting with Adrian.
Yes,
And-
we're building the endpoints and the destinations.
Oh yeah, the innovation.
Other
stuff,
people are
yeah.
building technically those rails, and we're facilitating to make it easy. The innovation on the other side, though, is putting Bitcoin in people's pockets. So the one thing that we're in final testing phase at the moment for is Bitcoin Payroll. So that will effectively see any business, so businesses that we onboard, but also much larger corporate entities, typically with north of 500 employees, having the ability to pay their staff and their workforce in Bitcoin. Now, it's not going to be tax efficient, but instead of issuing perhaps a £50 DIY voucher or some sort of afternoon tea at the Ritz for an incentive or a bonus, for the first time, companies can onboard with our payroll solution and cascade or pay their staff instantly in Bitcoin. So the idea being then that we have hundreds and hundreds more users of Bitcoin, or people that have been awarded it, that are now incentivized to spend it. So our mission again is making sure that use of Bitcoin as money is something that we don't miss out on, because I think as amazing, and we'll come on to treasuries shortly, as amazing as an asset Bitcoin is, we have to remember that it's freedom money at the end of the day. If we lose the ability to spend it, then I would argue that the value of Bitcoin is enormously eroded. I mean, in the general sense, the monetary value will continue to go up no matter what. That seems absolutely in question, without question. But I think we absolutely have to work hard to defend the ability to use it in everyday trade. Maybe we don't need it today. Maybe it's not absolutely essential, and that's why we've built it in a system that can work seamlessly alongside all of your current payment methods. But there may well be a time, and we're seeing an enormous lurch towards a degree of authoritarianism in politics at the moment. And we know for the first time we've got the technical toolkit. We see it in other countries around the world where social credit scoring is applied, and linking social credit scoring to financial systems puts you in perilous danger of constantly being debanked, of having wrongthink, and the government effectively mandating and controlling how people behave in society, what they think, and how much they buy, or what they buy in whatever quantity. So I think we almost can't, I would argue that we can't wait too long. I'd almost argue that we can't wait at all to make sure that the right to purchase goods and services using ideally freedom money is defended and is disseminated in every single business. Because only if we can push back on any kind of social credit scoring or deplatforming risks can we actually protect ourselves from it. If you try and implement it later, it's too late. But you can effectively challenge any policy decisions that a government might want to move forward with if you've already got the toolkit out there to push back.
Mm-hmm. We kind of touched on it a little bit with the discussion with Adrian, but I'm curious about just the infrastructure of payments, and sort of you had mentioned incorporating Bitcoin into that. Would you mind maybe kind of helping us understand what we have right now, how it's going to be, how Muscat kind of comes into play with that?
Yeah, I'll hand off to Adrian on that one, because I think that the four-party card model is something that people may be loosely aware of, but it's not obvious to them.
Yeah, what is the four-party card model?
Yeah, and bear in mind, everything we use today, cards, iPhone, Google Pay, all use the same set of legacy bank clearing systems in the middle.
Okay.
So all the innovation since the 1960s has been built on what was originally, and it was always young lads running around London with bags full of cheques. Cheques for the other banks, and that was the clearing. So at the end of the day, you cleared the cheques between the banks. And so banks would accept cheques drawn on their accounts from other banks that had cashed them, and then there would be a settlement at the end of day.
Somebody else ran around with bags of money?
Well, there was a bit of that going on. In fact, it was moved inside the Bank of England, so it was moved from one vault to another, a bit like Gringotts, I suppose. It's sort of Harry Potterish. What happened in the 60s was that process was automated, and that was the Bankers Automated Clearing System that was built.
Did that become phone calls?
It became a computer system with some phone calls.
Okay.
And so we're sort of getting into the the early stages of IT. Expensive and clunky, but it worked, and it was cheaper and safer than young lads running around with bags full of checks. And then there was an update program in the 1990s that moved BACS into a much stronger footing, and BACS remains one of the most effective clearings. Faster payments came along after that, and faster payments is built on bits of the ATM network and the banker's automated clearing system.
Can I ask how SWIFT comes into play?
So SWIFT is an international clearing system.
I see, so similar but international.
Yeah,
Okay, got it.
and works on much higher values. You know, it moves millions and trillions of pounds around, whereas the UK clearings are designed for domestic movements of money.
Got it.
So the card schemes came along starting in really the 60s with the early ATM cards and debit cards. And what your payment card is a means of giving an instruction to your bank. That instruction is taken these days by tapping your card on the terminal, sometimes proving who you are by entering your PIN, sometimes proving by the fact you have your phone with you and you've entered your fingerprint or face print, and that's allowed you to open up the phone application. That instruction flows to what is called a merchant acquirer. They're a bank, and they operate the infrastructure that allows you to accept that instruction at point of sale with a terminal or some other mechanism, an e-commerce website. That instruction to pay the merchant from me travels to the acquirer. It then, within normally a 12-hour cycle, sometimes 24, travels to the relevant bank that gave me my payment card. So that bank may not be in my country, of course, where I've spent the money. I might be traveling the world, in which case that instruction has to travel to that bank overnight, and the bank that receives that instruction decides whether or not to honour the payment. And there are reasons why they won't. It might be fraud. It might be suspect. I may not be allowed to buy those goods or services. If it's an expense card and I'm trying to use it in some seedy joint somewhere, it'll get declined. Now, sitting inside this, there's a almost instantaneous authorization service that goes on, which means you may not be allowed to do the transaction anyway there and then. At the end of the day, the bank that's received my request to pay the merchant gathers them up with all the other requests they've had from all their cardholders, agrees to 99.9% of them, and remits the balance of funding through the card schemes via the international settlement network, which, for example, is used. And that money is then received by the merchant acquirer, who works out how much of it is due to the particular merchant that I spent my money in, and that money is then sent in aggregate, so it's not individual transactions, it's just an aggregate amount of money for the day to the merchant. And it's
a lot of steps.
A lot of steps. It's an account-based system, so it consists of lots of ledgers. There's a ledger that, in essence, the merchant has. There's a ledger that the merchant acquirer has. There's a global ledger the schemes operate between all of their banks, and then the card issuer has a ledger. And then if you're an assiduous customer, and like my mum, for example, who notes every single transaction in a book separately. Her own ledger, which is great. You know, she's never been ripped off, but you know, marvellous. Everyone's running ledgers, and ledgers are expensive and cumbersome. And notice that everything in that process is delayed. The movement of the data related to the transaction is delayed for each party, apart from the authorization message, which is practically real time, even on a global basis. It's quite an extraordinary capability that schemes have built. The movement of money is at best within 12 hours, but it can be 3 days. And so what we have at the moment in the world's retail payments infrastructure is a 1960s system built on the idea of young boys running around London with checks that has been built on layer on layer on layer. And, you know, Apple and Google, for all their technical excellence, have just added another layer to, if you think of it as an onion, this onion's very, very big now, lots of layers. Each layer takes adds a bit of cost to the whole thing, and a bit of delay and a bit of complexity. And some of the bits in the middle are quite old. In this country, we've had various renewal programs, but in many countries, the clearings are legacy stuff going back a long way. And so they limit what you can do with innovation in payments. So when we're looking at what we're doing, we're using the bit that is really well established and everyone loves, which is the terminal at point of sale and the ability to scan a QR code or tap and pay.
Talking of that, which is a great segue, can we get a demonstration of it?
We can. Here's one I made earlier. I don't know whether you want to potentially put this out to your viewers. It depends how many live stream viewers you have.
So yeah, would you
If it's
be talking
possible to zoom in.
Okay, that's a good spot, Anton's saying.
Okay, I'll hold it there. You guys can carry on talking.
And we're going to zoom in. Yes, yeah. And would you mind just sort of just explaining how it works practically, and how it kind of fits in how you.
Yeah. So what's happening here is this is our payment terminal.
Can you move it to your left, please? There it is. Yeah, perfect.
You zoom in a little bit on that. It might render.
Is it possible to zoom in anymore?
In a detailed enough way for your internet viewers to pay a 1 penny invoice. It's not going to break the bank. So if there's anyone watching who wants to see the demo, then feel free. If not, I shall step in. So what's happening here is this is your payment device. The step that you didn't see before this was you have a home screen with two options, pay by card or pay by Bitcoin. I selected pay by Bitcoin and I entered the amount, so that in this case it was 1 penny, and a QR code pops up. What's happening in the background there is the merchant, we've already onboarded them and set them up with both the card and a Bitcoin account. We've provisioned a Lightning node for them, so we partner with an entity right now called Voltage. So they provide all of our Lightning nodes in the cloud for each merchant. The merchant themselves contribute liquidity, so we open the channel. Musket is the final node on the network, so the final hop as the payment comes through from customers. And that means effectively we can open a direct channel in a hub and spoke model that goes from us to each merchant. Each merchant therefore has their own Bitcoin. Typically we advise around about 1.5 million sats as a minimum, but that's theirs. You know, that at their point is it's theirs, their channel. And
so sorry, what do you mean? They have 1.5 million sats in their account that they have to keep there?
Correct.
Okay.
Yeah. So that's part of the onboarding process, and we are looking at ways. You mentioned innovation before, at ways to do that without having to have deposits. But I think that infrastructure and facilities to do that are still emerging right now.
Is it like a security measure to have that?
It's the only way to operate without being a custodian. So
Interesting.
It's the way that we manage to operate outside of the FCA regulations without having to become a crypto asset provider.
Got it.
We will eventually, in time, do that, get our license, make sure everything is fully approved, and be able to operate as a custodian if needed. But again, our preference is not. Our preference is that this is a direct relationship between a customer and a business, and something that we facilitate the rails of. But even if we wanted to, we can't intervene and stop the transaction. So, so that's the that's sort of what's happening in the background, and that settlement then is final. So I will, well, I'm not sure your viewers have got their Lightning wallets to hand. So as we are live, I will.
And so that would be necessary. You need to have a Lightning wallet to.
You need a Lightning wallet to pay this invoice. Yes. So the idea being, so I've just sent.
Can't be like a regular Bitcoin wallet. Has there's specific.
Correct. Ooh. Yeah. So what's happened there is, so I just scanned that invoice and it paid, and you can see there. The transaction's gone through and the receipt has printed. So on the receipt there it says the amount, which is 1 penny, and today's exchange rate, and that's pulled a live exchange rate from 3 different entities and created an average price for that. So, so that's what's kind of happening in the system. The idea of the whole thing is that if a merchant is accepting Bitcoin, the person paying knows what they're doing. You're not going to go and try and pay for something in a currency you don't have access to. So if Bitcoiners have a Lightning wallet and they know that they can pay, then the idea being all they have to do is scan their Lightning wallet. Now, we have enabled Bolt cards on this, so you can tap a Bolt card or a Bolt ring, anything that's Bolt enabled, you can pay for the invoice that way. But it's incredibly straightforward.
It is. It really
And
is.
the screen that you missed at the front there, I don't know whether you can see that, it's just the holding screen there is the Musket logo and two options, pay by Bitcoin, pay by card. So it's a simple selection at the point of sale. And as I said, the whole point here is for us to make it as easy as possible to transact. And for anyone who's working, whether that's someone who's always interacting with the payment system, or whether it's a casual or seasonal worker. You know, we wanted this to be able to operate in a way that your 18-year-old sort of weekend person who's working in the garden centre for 3 hours can operate this without any training, in the same way that someone who's using it every day can. And I think we've achieved that, which is great. And you know, the big thing for merchants here is we try to save them money on the card acquiring rate. So your traditional fees, we're very aggressive and attractive rates-wise there. And we also have our EPOS functionality. So if you're a bar, a restaurant, a cafe, we've got all of the system and the toolkit that you need really to run your business. So actually through one interaction with Musket or by onboarding just with Musket, you can control your inventory and stock, your staff, your compliance checklists, and you can run your restaurant. So you know, our key target really is that hospitality space and online e-commerce, where people are selling goods and services online. We run your gateway and operate in the same way that Stripe or Adyen might.
Very cool. You'd mentioned that the rates are competitive. What is the difference between sort of the transaction rates for Musket versus a regular card?
It's a very complex picture. Payments, as Adrian has probably painted. You know, you've got all of these various layers and various costs. What happened a few years ago, there are entities in the market that typically are American, so the likes of Square, Zettle, SumUp. They took a different approach, and what they've done is bundled all kinds of software, hardware and capabilities together with the payment services and given a single rate. So, you know, if you can, usually there's always a bit of wiggle room and negotiation, but your standard rates typically look at somewhere between 1.4 to 1.8% with some of those providers. And that gives you a payment service, it gives you a hardware device, it gives you some EPOS software, so you can run a business, but the rates are quite high. On the lower end of the market, in the UK, there's been quite an aggressive race to the bottom. I think partly driven by EU regulation, which mandated that the schemes, so Visa and MasterCard, can't charge more than certain percentages. So for debit card transactions for Visa and MasterCard, it's around about 0.2%. And for credit cards, 0.3%. But then you have all of those layers of that onion on top providing services. So, you know, you can typically see fees in the market that go down as low as, you know, sometimes 0.4% for a personal debit card transaction, sometimes lower. But if that's all you're doing, just taking personal debit card transactions, then that makes sense. Typically, every business is different. They may need to provide other services. And that's where there's an incredibly long list of card types that you need to support. So business cards, premium cards, every card attracts a different rate. And that's where I think the likes of Square and others have done quite well, because they've simplified it for a merchant. You know, they've taken risk on some of those more expensive card types, but actually assuming that they're a lower percentage of the overall bucket and basket of transactions. So maybe they lose money there, but it's 2% of the transactions, where they're actually making an enormous amount on debit and credit cards. So if you're charging 1.5+% for a transaction, but your cost base is around about 0.4, then there's some great margin for you there. So we try to operate in the middle. Our go-to-market is 1% per transaction, so lower than those operators, slightly higher than the lowest cost operator. But in doing so, we're bringing Bitcoin to the table for those merchants, which gives them a nice differentiation factor from their customer base. And we also, for that price, we also bundle in the EPOS services as well. So rather than just having the terminal itself and being able to take transactions, you're getting a really high-powered software kit with that to run your business. So every sale is involved and engaged. We try to make sure that we clearly differentiate from the competition and stress the importance and value out of Bitcoin on that journey. And so far, it's going quite well. We're growing at quite a rate. If I think about where our pipeline is, which is our qualified pipeline, these are real opportunities. We're sat on about 500 million of volume that we need to go and win that business, but it's going well. So if we can convert that, I think we're looking to end the year in 2025 around about 100 million volume, and we expect to be around about 350 to 400 million by ideally the end of Q1 next year. So quite an aggressive uptick in part through our sales team expanding and having done a fantastic job at finding opportunities. And Bitcoin does a great job for us as well. Bitcoin continues to just do what Bitcoin does, and the marketing and the brand of Bitcoin is really powerful. And when you go and talk to merchants, they quite often love engaging and talking about Bitcoin, which changes the narrative and the conversation, because otherwise you end up in a discussion about how low is your rates, how low can we go? How do I basically get payments for free? Whereas actually more merchants now seem to be reaching out to us, but also engaging with us about, I'm really interested in Bitcoin. How do I accept it? Once I've got it, what should I do with it? How do I best make it work for me as a business owner? And so I think, Bitcoin treasuries at a macro level have been, the talk of the summer. They've been amazing this year. I like to think that we're trying to enable not just Bitcoin payments, but micro treasuries, so that every business, whether you're a small cafe, whether you're a multinational retailer, you also have your own Bitcoin treasury through selling goods and services in Bitcoin.
I hope you found that conversation helpful and interesting. Gives a little bit of context and understanding about how traditional payments work versus this new wave of technology. Okay, moving on to some more news stories. Meta says it will soon use conversations from its AI chatbot to help sell ads. The company announced that starting December 16th, interactions with Meta AI will be added to the long list of signals it already uses to target ads and recommended content. Users will start seeing notifications about the change as early as next week. Right now, Meta targets people based on what they post, what they click on, and who they're connected to. But chats with Meta AI could reveal even more direct information, like what products someone is shopping for or what trips they're planning. That data could then shape both the ads they see and the content shown across Facebook, Instagram, and WhatsApp, and the standalone Meta AI app. Meta says the change is designed to make ads and content feel more relevant. For example, someone who talks about hiking with the chatbot could see more hiking gear ads and outdoors-related posts. The company stresses it will not use conversations about sensitive topics such as politics, religion, health, or personal identity for ad targeting. Users will also continue to have access to Meta's Ad Preferences tool, which lets them adjust what kinds of ads appear in their feeds. Meta AI now has more than 1 billion monthly users. And with Meta's advertising business already bringing in $46.5 billion last quarter alone, the new policy is expected to further strengthen its position as one of the most powerful ad platforms in the world. Okay. Anton, you going to stop using Meta?
It's a good plan. I don't know if I can because they control everything.
But
but
what do you
definitely
use?
for AI.
Well, yeah, for AI, I guess what Meta platforms do you use? Yeah, and Meta AI, do you use that?
I haven't used it, no, which seems like a good thing now. But it's I don't know, maybe I have because it's kind of integrated in like Instagram's search feature, and I don't know what kind of, like WhatsApp, that's all Meta. I don't know what kind of AI I'm accidentally using, you know what I mean?
I would say about Meta AI, because on the top of WhatsApp, it has Meta AI a thing, and I thought that it would, you could use it to search through your chats, trying to find like a random message from a long time ago. I thought that it would help, go through my chats and find that specific message, and it said I can't look through your messages. So that was interesting. But I think
that also feels like a lie, though.
yeah, yeah, and that will probably change. But as it stands, it doesn't. You don't put a prompt in about your messages and then it finds it. I guess it's about other things like what's the weather going to be like today, and then it would do its thing. So, but I mean, I think we're all certain that it's listening and watching us all the time. I don't like it. I find it so creepy, just to know that that is what's happening, and so manipulative. And I think, I don't know. I'm not really somebody who's susceptible to ads. I think I probably can count on one hand how many times I've seen an ad on social media and I've actually bought something or signed up to something. It's very rare.
Okay.
But I do think that many people are very, very susceptible to it, and it'll get you.
It
That's
will
how
get
they
you.
get
And
you.
they will get you. I mean, the story feels more like yeah, of course they are, rather than like a surprise. Because, yeah, of course that was coming. I mean, you can't say anything without seeing an ad pop up on your phone. So, of course, they're going to use what you physically input into the phone to target ads at you.
Interestingly, though, and in their defense, Meta's defense, it's no different to Google. Google use exactly the same data when you put something into search, and they have done forever. And when you're looking online at websites, it tracks where you're going and then feeds you ads and stuff like that. So it is really no different to that, I suppose.
Meta is so very ingrained in people's lives, though, in a way that I feel like Google isn't. Like email, yes, but like a social media, a messaging service, just like kind of everything that you use is that. So if you're using an AI component of all of that, I feel like it's a little more invasive than just a Google search.
Yeah.
Then again, you can say that Google, of course they have a ton of different platforms too, and who knows if they're going through your emails and
I think we know that
serving
they
you
are.
ads based on that. Do they admit that?
Yeah. Yeah.
All right.
I
Well,
think
I
that
take
came
my
out-
argument back.
I
It's
think
all
that came
it's
out
all
a
terrible.
long time ago. Yeah. Just assume that everything is being used. What's the thing they say? If you're not paying for the service, the product, you are the product.
You are the product. Yeah.
So, well, actually, I am paying for Gmail, so I should not be the product, but I'm pretty sure I am.
Yeah, you're doing both. It's fun.
Yeah, exactly. Yeah, it's great. It's good for me.
Is there anything that they could do that would make you just never use any of these apps again?
As I'm
What
hearing,
would the line be, I guess?
well, yeah, good one. I mean, I have them. I barely use all of them anymore. I think I just have them for convenience, I guess. Old pictures that go back, connections with people most of whom I probably don't really speak to anymore. So you mean to completely delete all of the, completely delete everything
All of your
meta-related?
accounts and your apps and everything.
Yeah, it's a tough one because there's always like certain things that hold me back. Like, I have a big Facebook page with a big Facebook following. That would kind of be weird to relinquish that, I suppose. I don't know. I don't use them enough. Like, I don't have the apps on my phone apart from WhatsApp. So I kind of keep them at arm's length. I don't feel like I'm putting personal stuff on there enough to be too concerned.
Okay.
But I do question it a lot of the time. What about you? What would they do?
I'm similar, where it's not too much that I use them for. I'd say, well, the one that would be a real problem is WhatsApp, because that's how I communicate with most people now. But I don't know, there's so many different alternatives. I don't think actually it would take that much for me to switch over to something else and delete accounts and never look at it again.
Yeah.
Facebook, you can already, the following is different because you have a commercial use for that. But Facebook, you can download everything that you've had on there and just delete it from the internet, which I've been tempted to do many times, but haven't actually gone for it yet.
Yeah. It definitely makes me, hearing these types of things, it definitely makes me want to look at other platforms to be using. And it also makes me think the future of these AI, like ChatGPT and all the other ones, is that the future for them too? Taking all your conversations and dishing out ads for everything.
Yeah.
That could potentially be their next move.
Definitely.
Yeah. On the AI conversation, should we move on to the next story?
Let's do it.
This one really grinds my gears. Hollywood is in uproar after the debut of an artificial intelligence actress. The AI character, named Tilly Norwood, looks and acts like a young influencer. Since February, she's been posting on Instagram, even claiming to have done screen tests for acting jobs. But Tilly isn't real. She was created by Elaine van der Velden, founder of AI startup Particle 6. Tilly recently posted a video boasting she could fight monsters, sell a car, and nearly win an Oscar, all in seconds. That sparked outrage when reports surfaced that talent agents were interested in signing her and that some studios were exploring AI-generated content. Actors quickly pushed back. Sophie Turner of Game of Thrones wrote, "Wow, no thanks." Cameron Cowpothwaite of American Horror Story called it thoughtless and disturbing. Ralph Ineson, who appeared in Nosferatu, was more blunt, posting 2 words, F off. In response, Van der Velden said Tilly is not a replacement for actors, but a work of art, comparing AI characters to animation or puppetry. Still, many in Hollywood say AI creation depend on real performers' work, often used to train the technology without permission or pay. The debate comes as AI anxieties remain fresh after, not last year's writers' strikes, but 2 or 3 years ago writers' strikes and actors' strikes, where unions demanded safeguards against digital replacements. Meanwhile, major studios are suing AI companies over copyright, and OpenAI has begun alerting studios that its Sora video generator may contain copyrighted materials unless creators opt out. For Hollywood, the clash over AI is only just beginning. Were you able to pull up the one of her Instagram clip reels? Were we able to play that?
Yes.
And I shouldn't really call her the AI creations.
Yeah, I'll just play it from here.
Okay.
So this is the you can put that on the screen there. So yeah, these are some of her, I guess, Instagram videos and some stuff that the company has released. It's weird. They released like a little short about her with other AI people as well. Yeah, I mean that's just, this is where it's going, and I think they're going to push it as far as they can until people say, I don't want to watch this with their money, and don't watch it. Right now, it's a novelty. Hopefully, the novelty wears off. It very much might not. I don't know. I feel like it remains to be seen, and it's kind of it's on consumers to, because Hollywood's going to do whatever makes them money. They don't care.
Yeah, they don't care about actors. Yeah. There was an interesting, so as with this is playing out, I guess this is a article about it. The SAG-AFTRA had commented on this. Their response was, hold for information. SAG-AFTRA believes creativity is and should remain human-centered. The union is opposed to the replacement of human performers by synthetics. To be clear, Tilly Norwood is not an actor. It's a character generated by a computer program that was trained on the work of countless professional performers without permission or compensation. It has no life experience to draw from, no emotion, and from what we've seen, audience aren't interested in watching computer-generated content untethered from the human experience. It doesn't solve any problem. It creates the problem of using stolen performances to put actors out of work, jeopardizing performer livelihoods and devaluing human artistry. Additionally, signatory producers should be aware that they may not use synthetic performers without complying with our contractual obligations, which require notice and bargaining whenever a synthetic performer is going to be used. Yeah, this is interesting.
Synthetic performer is such like a scary future term for what this is.
It is. It feels like they're trying to make it like a weird thing.
Yeah, that's true. That's a good point. I think they call them, don't they call them synthetics in like Alien Earth or something? Something that I watched
perhaps.
recently.
Yes. I think one of the groups. Yeah. I mean, it's troubling. I do think it is the future. I do think it's the way we are heading. I don't know that people are gonna. I don't know whether people are gonna just turn their backs on it. I know that you said it definitely is a novelty, and I think there will be interest. I think, yeah, just what's the point? What would be the point in just watching AI generated stuff? I mean, if it's interesting, I think most people, if they don't even know the difference, probably wouldn't care. So I think you'd only have an issue if it's from like a philosophical, ethical standpoint where you're like, I don't want to watch AI generated people pretending to be images masquerading as humans. I want to watch actual real humans. But people who don't kind of care about that or even know what they're watching, I think it might just become the norm. I think the bigger concern for me too is how easily manipulated people are. There's been so many stories about people in relationships with AI chatbots, people doing insane things after discussing it with their AI chatbot and being encouraged to either harm themselves or other people or all sorts of crazy stuff. And this adoption is just another one of that thing. And it's going to be a really... Already there is so much confusion about what truth is. There's a huge wave of people who really don't care about truth much at all. This is going to make it a lot more confusing. It's going to be very confusing.
Here's my my hopeful take for Hollywood, at least. I think there's been, over the last 10 years, this like surge of superhero movies and big budget schlock, and that's kind of like taken over everything. And that's all you see now on Netflix, and that's all you see in theaters. And it's boring. It won't go away. It'll continue, and there will be an audience for it. And that's, I think, that's where you're already starting to see AI used in visual effects and motion graphics and things like that. That will certainly rise to a level where that's pretty much entirely AI. And I think they'll start introducing AI characters into those types of things. Like first it'll be like an alien, who's like sort of a character in a sort of a superhero movie or some fantastical thing. And then it'll be a more normal character like this in one of those like big budget movies. But I think people are already pushing back against those superhero movies, and people like really are craving like dramas, like grounded dramas and normal movies and comedies that have kind of vanished from movie screens. So I think this divide that we've already gotten into, where there's like all this big budget stuff and these smaller movies that come along every once in a while, people are like, yes, I want to see more of that. Eventually there will be a movement like there was in the 70s and 90s of like a sort of indie grounded movie movement. We're not there yet, but I think that divide will happen, and there will still be these big budget movies that will be using AI, and a lot of people will say F that, and more people will be making more grounded, normal stuff. I think it'll coexist, and I think there will be an audience for both. That's my hopeful take. Yeah,
that would be good. I would hope for that too. We'll have to see. We'll have to see what it's like sort of sitting through, whether you would want to sit through half an hour or an hour show of AI characters. I'm curious to see whether I could like sit through that and be like, yeah, this is great, Because, we didn't hear the sound, you and I didn't hear the sound, our audience probably didn't either, actually. But I think like a lot of the there's a lot of actors, Hollywood folks. I think it was Whoopi Goldberg.
Yeah.
I think she was complaining about it. They're terrible, and the acting's awful, and you can tell. I think it's a bit naive. I think it's going to get better, and people won't be able to tell. And yeah, you can kind of play that card right now, but it's not going to be valid for a long time.
Yeah, it'll be great, and people won't be able to tell. And I think people will eventually just want to see something real. And I think there will be a split in camps. And then from an animation perspective, that's like fully gone. I don't know how animators and graphic artists stay in the movie or TV business at this point. You know?
Same. It's going to be a crazy ride. For kind of anyone in the arts. It is a shame that it's the arts that gets kind of wiped out first. Like the soul of communities and. Because what is humanity without any like creatives if we're just kind of wiping? Nobody can make a living out of that.
Yeah, but at the same time, the arts was always kind of until recently, it was always a business that you couldn't make money with. You had supporters basically. The Renaissance wasn't based on people getting jobs. It was wealthy patrons of the arts that would just pay you to make things because they wanted the things. It wasn't like a real business, I feel like it's maybe moving more towards that. But I still think there's people who want to see well-made things that are not made with AI. And I think that will grow as the onslaught of AI and trash, as basically the dead internet theory becomes true. People will more and more want to gravitate towards something that's real.
What's the dead internet theory?
Hope. The dead internet theory was that it's not happening yet, but I feel like it's approaching there. It was like in 2015 or something. They proposed that there's so much bots and schlock on the internet that basically the whole internet is just bots talking to bots, that there's nothing really real out there, which was like a conspiracy theory at the time, but it also does feel like something we're slowly edging towards right now.
And just to get my head around that, does that mean that people, living real humans, aren't on the internet using it?
No, just that the vast majority is just bots.
Yeah, I noticed that when I was kind of in the social media space of because I really struggle with social media, don't want to be on it most of the time, but also see the value in it in certain capacities. And so using like platforms where you post things automatically and then you can kind of comment on things, but eventually I could just see it being like those kind of platforms and things talking to each other, but not really any human engagement. It just, I can definitely see that happening, getting to a point where that's just happening all the time.
Yeah.
Yeah, it's
scary.
It is. Okay.
Why don't we go to a quick commercial break?
Let's take a break and we'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. Now we're going to play an interview from a previous guest, Freddie New of Bitcoin Policy UK, to kind of suss out what the deal is with UK Bitcoin policy and see where things are right now. Enjoy that interview with Freddie New.
I tend to think of it not so much as a moment as a process. So, like a lot of people, I came across Bitcoin several times before I actually paid any attention to it. And because of that, I have obviously the deep regret that most Bitcoiners feel for not having understood it earlier.
Me included.
Really?
Real FOMO.
Yeah, exactly. So my first touch point was actually during the probably the tail end of the Great Financial Crisis. I was working still in law back at that time, and it was during the Cypriot banking crisis, 2013. And if you remember, or if anyone knows very much about what happened then, essentially the Cypriot government fundamentally confiscated amounts of money that were held by depositors above a certain level in Cypriot banks. And it was around about that time that I remember reading an article somewhere that went into the censorship resistance of the Bitcoin system, and how that kind of confiscation wouldn't have been possible had people been keeping their money in Bitcoin, which of course no one was at the time. So I read a bit about it, thought this sounds interesting, then forgot about it for another couple of years, and then tangentially came at it through hardware, actually building computers, which I used to do for fun, and then again, still not understanding it properly. Thought I would have a shot at mining. Didn't know what I was doing either. Thought I could GPU mine, not realizing or knowing anything about ASICs at all. And I think lost a reasonable amount of money on electricity costs. Didn't really mine any Bitcoin. And to my shame, I don't actually know where that wallet is. But I started running a node. And that was so probably my biggest takeaway was learning how Bitcoin Core worked and how the system worked a little bit better. And then of course in 2017 when it became much more mainstream, that was when Bitcoin, I remember that. Let me look into that again. So yeah, as I say, not so much a moment as a process.
It seems like that's the way with a lot of people. It takes a few touchstones. I like your willingness to explore and try and figure it out, even if you don't have a clue. That was the thing that kind of held me back, was not knowing. So just being like, oh, forget about it. But it's nice that you dabbled.
It's nice being a tinkerer. I try to encourage that with my children. I like taking stuff apart.
Yeah.
Actually, we get kind of excited when something breaks, and we can then take it apart legitimately without worrying about it. But,
yeah.
But not everyone's like that. So
True. Could you tell us a bit about the work that you do with Bitcoin Policy UK? Sort of like on a day-to-day. I mean, I'm sure you don't get to do 8 hours a day on it every day, but yeah, what are you doing on it?
Sadly, I don't get to do 8 hours on it. So the organisation is led by Susie Violet Ward, whom you know, and who's going to be working alongside you, which is great. She and I and one other co-founded the company 2.5 years ago or so, really because we realized that although there was a lot of crypto, Web3, stablecoin, altcoin lobbying happening in the UK, there wasn't really a comparable organization doing that same work just for Bitcoin. And so we were set up with the specific aim of making sure that Bitcoin-only voice was heard in the room, and that policymakers came to understand that there are many different types of crypto assets, and there are significant differences between them. They each do different things, and lumping Bitcoin in with everything else is the incorrect way of thinking about it. And so Susie and I have sort of divided the work of the advocacy group into sort of 3 broad areas, one of which focuses on policy, law and regulation, and contact points with decision makers, MPs, regulators. I head up that team. There's the mining and energy team. Susie originally led that before she made the step up to CEO. And the focus there is really trying to also to engage with policymakers, but in the sense that a lot of them fail to understand, I think, at the moment, how Bitcoin mining as an industry can actually integrate with things like our existing electricity grid, how useful it is as a demand response buyer of power for our renewable energy grid, and how, as an industry, it can present interesting opportunities around heat recycling, for example. And then the third limb of the group is educational, and in that context, we work with partners such as Jordan Walker at the Bitcoin Collective, and also various teachers in schools, actually. So 2 of our teachers run the Mi Primer Bitcoin diploma within their schools. One of them has a slightly greater focus on the hardware side of things. So we have over time received donations to by old miners. Some people have donated miners to us. Those, in many cases, are now actually in schools being taken apart. Kids are being taught how mining works. And so I suppose there's a bit of a crossover there between sort of financial education and a bit of engineering as well, and also some computer science.
That's fantastic. I was going to ask what have been some of the wins that you've found with the Bitcoin Policy UK, and that sounds like one, getting things like that into schools and having kids learning about it and working on it
Yeah, I agree.
for students.
And it's rather a nice one. It's probably a less obvious one. I feel in many cases what we're working on here is a very long-term project. There's a famous quote. I think it's by Max Planck, which says that new ideas do not triumph because people change their minds. They triumph because people who believe the old ideas eventually die and are replaced by new ones. So, not that I would wish for the old stale pale central bankers among us to pass on, but that may inevitably be what happens. Um,
Yes.
so yeah, I definitely cite that as one of the wins. Maybe two other ones that are relatively recent. So we have been pushing for a long time for Parliament to recognise a recommendation in the Law Commission's report, effectively legitimizing Bitcoin as a type of property. There is actually a piece of legislation. I checked this morning. Actually, it's currently in committee, so it has its progress through the Lords and the Commons is going reasonably well. It is a new piece of legislation which specifically recognizes that digital assets, within which they include Bitcoin, are a new type of property and also should be capable of being protected with the full force of the law, as are all other types of property currently recognized by the law, because our law currently doesn't recognize them. If our law can't really define them properly, so that's a rather geeky piece of legislation, but something that we're very pleased finally seems to be coming through. I think the first time I mentioned we started advocating that was about 2 years ago. And then the second piece, the second minor win I'd have said is the FCA has obviously historically been very, very anti-access for retail investors to purchase exchange-traded products which give exposure to Bitcoin and to crypto. And they have finally relented. They are going to allow ETN, not ETF. So there's a difference, obviously, between exchange-traded funds and exchange-traded notes. They put a ban in place late 2020, which became effective in January 2021, which stopped all retail investors from having any exposure to exchange traded products. They are now in the process of consulting to lift that. I'd say that two things: the ban's not effective yet. Sorry, the lifting the ban's not effective yet, and it's only for ETNs, not ETFs. But it's a step in the right direction, and it's something we've been harassing them about for a long time. So they are probably sick of hearing my voice.
Congratulations. It's incredible what you're doing. And I would hope that with more awareness, there comes more support, because it's a volunteer organization, and what you're doing is beneficial to so many people. Yeah, be great to see you get some more support there. Back to the point that you made about getting Bitcoin classified as property. Does that have anything to do? Yesterday we talked about a story in Nauru. It's this island off Australia, I believe, and they wanted to legalize Bitcoin and sort of try and get investment into Bitcoin into the country, which is like a population of about 13,000 people. And they had, Anton, our producer in the cloud, could you tell me if I'm correct on this? They wanted to classify it as a security rather than an equity. Was that it? Or was it the other way around, an equity rather than a security? Anton's just double checking. But could you tell me, so when you had said about classifying it as property, that means that if it is stolen, then who it belonged to could recover it? Like, tell me about that. Or is it to do with this security versus equity? Could you help explain that a little bit?
It's actually probably, if I had to unpack it, it's really neither of those two things. So
Okay.
I appreciate this is not a law show, but just in terms, a slight segue on how English law looks at property. There are two types of property under English law that are recognised. They use rather old-fashioned sort of medieval French terms to describe them. One is a chosen possession. So like I'm holding a pen right here. This is a physical thing that I can hold, and that's called a chosen possession, or a thing in possession.
Okay.
And then the law also recognizes, I suppose, rights-based pieces of property, and those are things like a contract or a debt. So if you lend me £10 and we record that in a loan document, then I have a right then to sue you for recovery of that £10 if you fail to pay. And so that right to sue you for the money is a form of property, and I can actually sell that. So I could sell that. I could sell my right to sue you to another party who would then have the right to sue you for that £10, and that's fundamentally how debt trading works in the broader market. Now, the interesting thing about Bitcoin is obviously it's not it's not a physical thing, so I can't give it to you, and it's also not a right either. And I think most legal systems would recognize that, and that's one of the reasons why Bitcoin was never considered a security by the SEC in the United States, for example, because a security is normally a type of paper, should we say, that's issued. Let's say a company can issue equity securities or debt securities. An equity security is a share in the company that gives the holder certain rights as regards the company. So, for example, if you buy a share in Apple, you can technically vote at its shareholder meeting. You might have the right to dividends. You can sell that share yourself. You can pledge that share as security, and you can do all kinds of things with it, even though it's an intangible piece of rights-based property. And a company may also issue debt securities like notes, loan notes, or something like that. And those are typically more akin to the £10 debt that I was talking about earlier. Now, obviously, again, Bitcoin it's not rights-based at all. If you have a Bitcoin, you essentially have you have a portion of the network that's completely immutable and is absolutely your property, provided that you control the private key. So in that sense, it's more akin to a bearer instrument, but it's no one's liability. So it's not a debt. It doesn't give you a voting share in how the network functions. So it's arguably it's completely distinct from something like a proof of stake token, where the more tokens you have, the greater say you have over how the network behaves and how the rules are made. So it's rather an it basically fell between the two stools that legally that the law had divided property into, and the law commission
what money, can I just to jump in there, can I ask what money would be then of those two? How is that legally classified, and would Bitcoin then be in that same category as pounds?
Oh, that's a fantastic question. I don't think it would, technically speaking, because in fact, all modern money is a liability. So where we were talking about debts, so again, going back to our £10 example, so a banknote is a liability of the central bank. And that's why written on, actually, I think I've got some here. So let me see, written on a banknote, there should be, I promise to pay the bearer on demand. Yeah, here we are. I promise to pay the bearer on demand the sum of £10. So that's written on all of our banknotes. So it's clear that it's clear on the face of it, this is a debt. And back in the day, when our money was backed by anything, you could literally exchange that for £10 worth of sterling silver, and that's where the word sterling comes from.
Interesting.
And if so, that's central bank money. Commercial bank money, most modern money in the monetary system is actually created when banks make loans. So if you're taking out a mortgage and you put a deposit down for, let's say, 100K, and you borrow 900,000 from the bank hasn't taken that 900,000 from other depositors and lent it to you. It's created that money from nothing. And when it credits that into your account, that money is then a liability that you owe to the bank. But if it was cash, then that's a liability the bank owes to you. So if you go to the bank, you should technically be able to withdraw that liability from the bank. So to answer your question, all modern money is a liability.
Interesting.
It depends whether it's a liability of a commercial bank, a central bank, or of you.
So I guess my next question is, so then how did you get get Bitcoin recognized? Was there like a new term created for property for Bitcoin, or?
It's rather cleverly done in the legislation, actually. So it's a sort of a typical piece of English law drafting. It's one of the few things that we're still good at in the UK. It's the legislation. I recommend people read it. Actually, it's very short. The legislation simply says that a thing shall not be excluded from being property by virtue of being neither a shows in possession nor a shows in action.
Now
So
it's
in
a
other words,
catch-all for everything else.
yeah.
Perfect. Congrats. I'm actually studying law at BPP, which I saw you had done too. And so, yeah, I find this all very fascinating.
Oh, that's hilarious. I didn't know.
Yeah.
Which location are you at?
I'm doing it online. I've been doing it online part-time since September 2023 when I was living in the States. And yeah, I did the law conversion. And then now I'm studying the SQE preparation course. For anyone out there, that's the kind of solicitor's qualifying exam prep. It's changed a little bit. I think you did the LPC.
Yes, I
Um,
did.
so yeah, things are a bit different, but I'm not sure. I find it fascinating. I love it. I'm looking forward to getting the master's. I'm not sure whether I'm going to pursue it at this time. I'm quite enjoying still entertainment and acting and things like that. But it's a nice thing to have in my pocket if I do decide to pursue that. And just the knowledge. I think knowledge is power, and I find it fascinating understanding how law. I didn't know how government worked before. I didn't really understand how law worked before, and so it's just I find it really helpful.
Yeah,
In life, just
definitely.
to know
Well,
these things.
I'm sorry. I was sort of preaching to the converted when I was bumbling on about property
No,
law.
no. Well, it's
But
helpful for anybody else that might not know that. And I do need things to be broken down still too. I'm not, I'm not an expert by any stretch.
She's Hollywood's.
Welcome back. We hope you enjoyed that interview. That's all we have time for today. We'll be back tomorrow at noon. We hope to see you then. Take care.